U.S. Fitch warns economy showing signs of slowdown, largely driven by tariff policy. A leading global ratings firm warns that U.S. economic growth is slowing, attributing much of that trend to recent tariff policies. Fitch Ratings released a report showing that growth projections for the U.S. for 2025-2026 have slipped to roughly 1.6%, down from last year's pace. The Times of India reports they point to hard data, such as weaker manufacturing, trade disruptions, and reduced investment. Tariffs imposed under the current administration are identified as a contributing factor. Fitch warns reduced momentum could have broader impact on global markets tied to U.S. demand. Tariffs were intended to protect domestic producers, but may be having unintended consequences. Higher input costs, supply chain disruption, and reduced trade partners' demand. If firms expect tariff risk, they may delay investment, compounding the drag. Economic policy is a trade-off. Tariffs may yield political gains, but the cost in trade retaliation, higher consumer prices, and disrupted supply chains shows up in data. An international economics analyst explained with expertise. Fitch's warning is that these effects are now visible. What to watch next? Import/export data and trade balances in coming months. Corporate investment levels and business sentiment surveys, any policy shifts or tariff adjustments. Sources: slowdown warning from Fitch.